What's up and welcome to more trades. Today we're going to be looking at Bitcoin and the rest of the market. Uh, Today Bitcoin had a dump. We could call it a dump, a slight dump. Not really significant, but we had a move down. And if we take a look at the charts, we'll notice some things that Bitcoin just went to where it was not so long ago. And it found support over here. We went as low as 21,933. Depends on what exchange you are in. But if you look at the hourly, this was a 15-minute chart. If we look at the hourly, then you notice that Bitcoin just came down to zones of previous support, and at the moment, if you look at this position over here, you notice that Bitcoin struggled to break down or break above. We were wicking above and below. We had some nice moves from 21.3 up to 22.9. That's a big move, and we went back down again. What you see in the chart, these lines that I have, they're just Fibonacci channels. They basically follow Fibonacci numbers, and Bitcoin tends to find support and resistance in and around them. At the moment, we're at this Fibonacci level, and we found resistance over here on this chart, and we went down, and we were so close to touching this one. We bounced off, broke above, and now we're just ranging here. We could be doing something like this for the next coming days or even coming hours, and we might make a move out of here. We might have something like this. We just move here, here, here. Once we find support, we'll be going to the next one. And we might do this over here, come down a bit, and start going higher. That's if Bitcoin is going to go higher. On the other hand, I have another chart that shows Fibonacci channels that are drawn in a different way. Here you see the Fibonacci channel. I gave this target a few days ago. Before it even hit, I said if it hits here, this would be a good point to go short. And we see a nice move down. It was about from the peak over here till where we got to today. That was a nice 7.6% move. On this chart, the target, if we go up, is 22,560. We'll find resistance, like how we found resistance over here. We'll find it again if we come back here. On the previous chart, we have support. If we go down, if Bitcoin goes down by today, which is very unlikely to go there, but it's very possible, because Bitcoin's average daily range for the day is about, let's see, how much is the daily range for today? So the average daily range for today is $1,225. So Bitcoin for today could move from where it opened at around 22.7. It could move $1,225 down or $1,225 up. We had a move from the daily today, from when it opened today, from right here, and we moved down. That's about, let's see, we had a $735 move down. We could have, if we say 1,225 is the average daily range, we could easily see around the 21,455. The 1,425 is not far away. I posted a video earlier saying that Bitcoin has formed sort of a double top, an M formation, and that is measured if you want to know what is the possibility, where's the next target. I said if we break the 23,350, which is this, the neckline for this M formation. This is the M formation. This is the neckline. And you measure it from, if you have one higher top and one lower top, you measure it from the lower one, the peak of the lower one, up to the bottom, the neckline, and you take that and you put it at the neckline, and you can see that the target for today is 20,933 for this neckline. However, the average daily range is $1,225 down, which would get us to around, as I said, the 21,400. But Bitcoin can exceed this average daily range. It happens. At the moment, there are no bullish signs. However, we found support at a level that I said Bitcoin has to hold if it wants to go higher. And that level was a trend line that Bitcoin had over here. If you notice the green trend line, I'm going to go to a higher time frame for clarity. We had, when Bitcoin came down, we had this wick over here, and we had this wick, and this was the resistance. Bitcoin broke above it. I'll get rid of this Fibonacci retracement level. Bitcoin broke above the green trend line, and we had to hold it if we want to move higher, retesting this previous high. At the moment, we came down. We had a nice wick over here of support. This is an indication that we might be moving up. However, if you go on the hourly time frame, you see that Bitcoin is kind of struggling to move up even above this previous lower high. So we need to move above this, get support on this, and start moving higher. Then we could do the same over here. Thanks, Jafar. Appreciate you attending, man. Thanks. You're always there in the streams. So Bitcoin is currently at good support, and we may find a bounce over here. So if you say Bitcoin would come down now at this candle, it needs to hold the $22,001.15 to say that we have support. But if Bitcoin can't hold this support and breaks below it, then it's further to the downside. And most probably what you would see if Bitcoin comes down to that level, Bitcoin would essentially possibly break below it and come back and retest it as resistance. So Bitcoin could do this. It could come down. Bitcoin can do this. Where is that? It could come down, retest the support, maybe be a bit here, wick above, and it could come down to this Fibonacci level over here. But it's hard to tell. It's a weekend. Always a weekend is a problem for Bitcoin. We never can really say where the price is going, especially on the weekend where the volume is very low. So when the volume is low, it's easier to move price. On this chart, I have the Fibonacci level that we got resistance from. If we come back to it at 22,560 or 22,500, depending when we come to it, with time passing, the resistance becomes at a lower target, so that's even worse for Bitcoin, and will be going lower. On this other chart that I have of Bitcoin, we have the resistance level. This is the resistance level, but at the moment we're struggling at it. We're currently below it. If you go to the lower time frame, you'll see that on the 15-minute time frame we're breaking below it, and this is what it usually does around the Fibonacci levels. Bitcoin, I see it usually likes to break above, get support, and maybe go to the next one. Or sometimes we could be trading along the Fibonacci level upwards. Look at this. We were just moving here for a while, bouncing off it till we finally we had 1 touch, 2 touch, 3 touch, and we move up. The market always likes 3 moves for some reason. I don't know why, but that's what usually happens. We could see 3 touches, then we move out. Over here, we broke. I would say this is 1 touch, but then it failed. And then we broke above, and again, we're failing. The M formation target is down to 20,400 or 20,900. What did I say? I think it was 20,000. Let's measure it again. Roughly, if we say the target is around 20,950, that will bring us exactly to this other Fibonacci channel that we might find support and maybe range around here and probably bounce. If we go to the higher time frame, I would like to show something else that is also not a good sign for Bitcoin. I posted it in my other video, on my short even. I said that Bitcoin has gone back into its previous bear flag. We had a bear flag. I'm going to draw it right now. This is on the 15-minute. Let's go to the 4-hourly. And this is the 4-hourly chart. You see what Bitcoin did over here? What it's done over here? It breaks down, ranges a bit, and forms a flag. So if we take a channel and when we try and draw a channel over here, say from the bottom here to the top here, and we take, and it looks like an upside down flag. They call it a bear flag. And the measured move of the flag is usually measured from, you can measure it, some people measure it from the top, some people measure it from the breakout. If you measure from the breakout to the bottom, the length of the pole of the flag, and you take it to the breakout from the flag and you put it at the breakout, which was over here, down, and it gave us almost an exact target of 17,415, and we came down to 17,592. So it gives you a good indication of where it could go. Now the thing is, Bitcoin is doing the same thing, and the length of this this flag took us around, say from the selling climax, the low wick, until the breakout. It took us about 176 4-hourly candles. That's several days. That's a lot of days. So let's say if we say now we had this selling climax over here, and we go for 176, we exceeded it. So we're slightly exceeding the time. Will it still be a bear flag? Obviously, in my opinion, the bear flag cannot exceed the length of the pole. So the bear flag shouldn't exceed the length of the pole. So if we take it from the breakout over here, measure it up to here. Oh, not trend-based fib, sorry. We want the time. Where's trend-based fib time? From the breakout over here to the top over here. If Bitcoin is getting there, it's kind of exceeding the length of the flag, and that's not very good. You don't want Bitcoin to exceed this length. See, it's not very far from reaching the length of the pole. That would be on the 29th of July. So yeah, so you want Bitcoin to stay within this and to break soon if it's going to break, because I'll show you the bear flag that I said we came back into it. We were above the bear flag. We broke the bear flag. I'm going to take it from, I'll show you from which wicks. We can say we had the bear flag over here, this wick and this wick, and you could extend it to this lower wick, and you could bring it slightly lower to touch this other wick. That is the top of the flag. We broke above the flag. Let me change the color. Let's make it flashy green. No, we have a lot of green over here. Let's change it to orange. And then we had another, the bottom of the flag was from the wick, the lower wick. And that is our flag. So if we break below 19, around 19,500, it would be very bad for Bitcoin. If we break below 19,500, then if we want to know how far could it could go very low. I can't see us going there very soon, but anything is possible. It won't happen in one candle. It's a target, and many people are calling for this target. I know some big YouTubers are calling for this target of 7K range. So we could go that low, but it won't happen now. Obviously, if this is a bear market and we're going low, it could extend for months and months and maybe 6 months or 1 year. We could be going down there, and the market is not looking that good. However, let's not just look at the bearish scenario. There is a bullish scenario. I would like to share it, and I'll show you what I'm looking at. We have two possibilities here. Let's go on the hourly. It's a bit more clear. On the hourly chart, this wick over here till up here could be considered that a wave 1, an Elliott wave 1 completed. And what does that mean? That this move down was just a corrective move. It's over, and now we're moving up in 5 waves, and we're going to start our new bull market or bull rally or whatever. If we continue up here, wave 1, and say this is a wave 2, it looks like a wave 2 because we have a, where it really looks like a corrective wave. So if I bring the corrective wave, if we say this is an A, this is a B, this is a B up here, and now we came down for C. And the measurement for this should be almost, I'll just move that out of the way, should measure, it could go around 1-to-1 Fibonacci extension. So we come from the beginning of A to the end of A to the beginning of to the end of B up here. So it's A, B, and C down. The C wave has reached the 0.786 and probably very close to the 1-to-1, and that's just enough. We still have some room for the 1-to-1, and usually they don't stay like the markets don't hang around between Fibonacci levels. So we got between the 0.786 and the 1. I would think we would touch the 1 at 21,800. We got to 21,944, but 21,800 is a possibility, and the C wave would be over. But if we come down here, it will make it a bit not clear, because I like how the way it looks right now. It looks like a 1, 2, and 3, like an ABC correction. And after that, we'll be moving to the upside. So if this was 1, this whole big wave from down here was a first wave, which really looks terrible for a first wave. It's not very clear, but you can count 5 waves up. And if you say this is a 2, then you want to know how far 3 can go. Same thing. You take it from the beginning of 1 to the end of 1 up here to the end of 2, and that will give you a target of a wave 3. Usually wave 3 can go up to the 1-to-1 or 1.618, and that gives us very high targets up to the 30K range. Of course, it won't be just one candle all the way up. You need to understand there'll be bounces and dumps in between. You can trade it, you can sell short in between and buy long in between. You can trade it level to level. That's why I also use Fibonacci channels, because they give me clear levels. I can see the levels. I also use EMAs, they give me clarity. So that could be a target. This is an important target, 28,788. Why is this important? The 28,000 to 30,000 range It's important because when you go to the BTC CME chart, CME futures, you'll see that we have a gap around that range. That we have a gap over here from this level over here down to here. And if you look at it, it's between 28,755, again the same level, 28,700 and 27,375. 30k range will be of interest because there is a lot of liquidity here. You can see that a lot of people went short over here. So if the market decides to reverse, then most probably we could come up here to stop people out. It's all a game of liquidity. You need to understand that the market is just, no one cares about what Bitcoin price is except if you're a holder, but the big players over here don't care really about Bitcoin price. They care about liquidity, getting money, growing their wealth. And if we go to Ethereum, I attempted a short on Ethereum today. I got stopped out. I had very tight stops. Hadn't I had tight stops, I could have made a good gain. I got in at 1,530. It was around 1,535 actually, and we had a 2% drop. That would be a good amount with leverage. Solana on the other hand has broken this channel that I had before. I showed it yesterday on my live, and it's currently just under that. It broke below and it's getting resistance there. So if Solana gets resistance over there, it might come back to other zones of interest on the 1 hour chart. On this indicator, you can see there are zones where candles are different colors. These are candles that have liquidity in them. There's a lot of volume exchanged, you can see over here. So we could go down to the 35 or even the 38k range for Solana. My Elliott wave count still is the same on the macro for Bitcoin. I believe we're still in a wave 4. And the wave 4 can still be valid even if we go higher. The only thing that wave 4 can't do is go into the wave 2 and break above wave 2. Then wave 4 can be invalid. If we go into the wave 2, then wave 4 will be invalid. So this is what I'm talking about. In green, you see the wave 4. We had a 1, a 2. We can't come in into wave 1. The wave 4 can't come in into wave 1. That's a rule. We can't come in to wave 1, which is at 29,443. But we have 29,243. But oh, you took a long from on ETC, Ethereum Classic. Unfortunately, didn't get there. It went so high, it could have gotten there. There was some good momentum to the outside. To the upside. This is Ethereum. It's not Ethereum Classic. Let's take a look at ETC and see where's ETC. ETC, Ethereum Classic USDT. Let's take it on Binance because that's the largest volume exchange. Let's look at ETC for a second. Oh, do you mean Ethereum, not ETC? Because ETC is showing me it's not at 1,000. It's $28 or $29. Ethereum, on the other hand, is the one that could have gotten to 1,600. So probably you took the long later on yesterday, and you just got probably the small bounce, barely got there, just missed it by a bit. Wow. What I like to do when I take shorts or longs, I put a stop loss. My stop loss would be in the negative. I give it time, and sorry, I give it time, and I wait for the what do you call it, the target. So say if I go long over here, if I go long over here on Ethereum Classic, it's at support. So if I'm to go long in Ethereum and I want to go long on Ethereum, I would firstly go on the 15-minute time frame. I would put my indicators on, the EMAs, and I look at Ethereum, and I would add the MACD. I would add the MACD to see the MACD at the moment on the lower time frame, on the 15-minute time frame. The MACD is curving down. You can see the blue line is curving down, so that's not a good signal, and the momentum is getting weaker. The green bars are getting lighter in color, and we're going down probably. But on the smaller time frame, and even in the larger time frame, you can see we have support on Ethereum over here and Ethereum over here. The average daily range for Ethereum is what is that? $120 for Ethereum. So we could move down $120 from where it's open today. So we opened, the candle today opened at around 1535. We could go down to 1420. Let's see how low did we go. We got to 1488. So there's still room to the downside. You can see a red candle forming, but not very large volume, but the EMAs are pointing down. They're basically telling you that we could be going lower. On the other hand, if we go to a higher time frame to see what structure are we in Ethereum, we still on the 4-hourly haven't broken the M formation. On the 15-minute, we probably broke the M formation. On my video that I posted earlier about Bitcoin, we broke the M formation also on a smaller time frame. This is a 4-hourly. Even on the 4-hourly, we broke the M formation. As for Ethereum, it looks like on the 4-hourly, we did not break the M formation. And usually, I say sometimes, not usually, we find Ethereum and Solana leading Bitcoin. But we know Bitcoin is king. And Bitcoin has a lot of liquidity, a lot of trading is happening in Bitcoin. So if Bitcoin has broken, Ethereum has a big chance of breaking down. But we have some support levels you need to be aware of. On the higher time frame, we have the 50 EMA. We have this support level. That's why it's significant. If we break below the 1463, then we could take a measured move and see where Ethereum will possibly go to. So if you go here, measure from the shorter peak till the neckline of the M formation, and we go below the neck formation, we could go down to 1,299. I don't think so that will happen today. There's very low liquidity, but having said that, we've seen some crazy moves on weekend. We've seen dumps starting on the weekend. So that's very possible. We could see that. If I am to take a short, I will not take a short now on Ethereum. That's not financial advice, but I personally would hold on a bit, but it's looking very to the downside, because even on the 1-hour chart, we're breaking down. The EMAs has already crossed over to the downside, and we're getting rejected from our daily open, and we're struggling at the 13 EMA. MACDs on the 4-hourly obviously takes longer to move. That's why I go to lower time frames. And I look at the MACD, and we're curving down. So we could have one more drop to the downside, and it becomes 3 taps to the low, and we could move up. Now, another trick in trading that's for beginners that I also use, even advanced traders use. It's very helpful. It's very simple to not complicate things. It depends on what time frame you're trading. If you're trading on the 15-minute, if you're trading on the 1 hour. Okay, so you say, okay, Ethereum had this nice move up. In order for this move up to continue, we take a trend line from the low, and we bring it to these, we make it touch these other lows. You can make it touch this low if you want. or now because we moved, you can say this is a uptrend. This is a support line for Ethereum. At the moment, we broke below the support line, the trend line, we got resistance, and we started coming down again. So if we come up and retest the 1,500 or 1,607, then that will give you a good chance to say, okay, I'm going to look at the lower time frame. I'll go on the 15-minute or even the 5-minute and see what happens. If we come up here and I get a wick, you see, if I come here and you see this wick that caused here, it caused a small reversal. Over here, we got a small reversal, small pull up, and we came down. But if I come here and I see a strong rejection with volume, then I'll say, okay, that's a liquidation spike. Because when you look here, this wick, you can see the volume was there. The second wick, this other wick was a liquidation. Sometimes we get a liquidation and a V-shaped recovery. I'll show you an example of a liquidation and a V-shaped recovery. A nice one. If you see it in the chart, then you know. I want to show you a classic example of that. This is a liquidation. We came down, we got a big volume spike, and then the candle pulled back and we closed above the high, above the previous high here. So if you went long there and had your stop losses down here or here, they would have been hit. But once you see a liquidation spike and a V-shaped recovery, then you know there's a good chance. That was, oh, this is a classic one. Look at that. Liquidation, not much of a volume spike, a slight volume spike, and we started going above it. We pushed above this high and we started going up. Then you'd know, okay, there is an uptrend coming. Unfortunately, market isn't perfect. You could get stopped out if your stop losses are very close. If you took the bottom, look what happened here. A consolidation and a pump out. Here, this is another sign of a liquidation spike. We came down, spiked, perfect V shape, and we trended up. And you take profit somewhere here. How do you know where to take profit? I said before that I take them on Fibonacci levels, or if I'm not sure where to take profit, I move my stop loss into profit. So if I came in a trade over here, a long on Bitcoin, say I took it over here, my stop losses would be somewhere down here, previous structure below it as support, and I'll say, okay, it's going to go up. Now I saw this, it's making me doubt that we'll continue higher because we're rolling over. Even the EMAs are pointing down. We did not close above this high. So yeah, that's how I would do it. Another coin to look at is Solana. I like Solana. I find it a bit difficult to trade, but we had a nice M formation here that started and confirmed the M formation yesterday. So yesterday we were here, yesterday on the 22nd, broke the M formation and we continued lower. The measured move for this, I think we exceeded it, but the measured move for this would be from here till here. Then I know, okay, once I hit that target, I'm happy to close my trade, or I can even move my stop losses. So if I went short on the break, there are people who trade breakouts. I don't. But if you take profit, if I see the breakout, then I would start moving my stop losses maybe to the neckline, and we go down. And you would see it went up. It failed to get to the neckline, and it continued lower. It gave a good profit for whoever took it. My risk to reward ratio, I don't really calculate the risk to reward ratio. Honestly, I just know one thing: how much am I willing to risk? And the reward, I leave it open, because I still have some trades that I took from way up in a short on Bitcoin, and I leave them open. All I do is I move my stops. But as I said, if you're a person who is a day trader, Jafar, if you're a person who just trades a day and doesn't leave money on the table, and that's a good strategy, that I'm gonna just trade, make money for the day. I make my $100, I close my trade, I have more capital to start my trade tomorrow. That is a very good strategy. You compound your profits. I would look for a 2-to-1 at least, risk to reward ratio. That's a good reward ratio. For me, what I look at, I get into a trade, I know I am willing to lose. I get into a trade of $20, I'm willing to lose only 3, maximum 5 if I'm feeling very risky. That's a very high percentage. That's like, if I say 5, that's about 25% of the margin I'm putting in. But my stop losses would be tight if I'm very sure about my trade. Like if I look at this trade, I was very sure of this trade. I saw this rejection, I was very sure. Once I saw this, I got in. So I didn't have a tight, I had a tight stop loss over here because I saw this as a very strong resistance. And when I see something as a strong resistance, I know the likelihood is that we're going to get a strong rejection. Oh man, I don't want to move that. It took me a while to chart those channels. When I see a strong rejection, when I know it's a strong resistance, a strong level, a strong rejection, and I see the wick, then I know that, okay, my trade is in good hands. I can relax. And once I give it some breathing room for the trade to move, then I move my stop losses, say down here. Then even if the trade closes, I'm at a very small profit, but I'm not at a loss. At least I'll cover some of the fees, the trading fees, and I come out okay. If it doesn't, then this trade was on the 22nd. You can see the percentage, and if you calculate the risk to reward ratio for this trade, let's take the tool and measure the risk to reward ratio. Short position from up here. Okay, you don't always catch the highs. You can't always get the best entry. Say you took it from here, you saw the wick, it came down, it went up, and then you notice the red candle, and then you say, okay, my target, I didn't set it from before, but the risk to reward is a very good one. It's almost 3-to-1. And that was a 1,496 move. How much was that? If I measure that to here, that was 1,831. That's a 7% move. That's a very good one. I like to take highest probable trades. You're right. Sometimes you're right, Jafar. I have been there, and it happens sometimes. And I'll tell you something, if you can't make money on the weekdays, on the weekends, it's even double as hard. And if you made money on the weekdays, that is Monday to Friday, then if you trade the weekend, my experience, to be honest, it happened that I've given back the profits and went into the negative. I've went into negative. How do I get into negative? How have I got into negative? I had 2 trades. I had a short, and I decided on the weekend I want to go long. And because my short was still going in profit, my actual wallet balance went to negative because my long was topped out into negative, or because I was going in impulsively several trades. No, it's going to go up. It's like now with Bitcoin. A lot of traders have gone long. They saw this green candle. Yep, we're going up. They got stopped out. Again, they see another green candle. It came down, probably hit their stops. Or maybe they're still holding on to their trade, and there is a chance it might roll over. So that's a problem. At the moment, if you look at Bitcoin on the 15-minute chart, we came back and we're testing this previous high, which is considered as a V-shaped recovery. See, we failed, we came down, and we came up, and we're holding this level. 1, 2, 3 candles. You can say we've been holding this level roughly 1, 2, 3, 4, 5, 6, 7, 8, 9. So that's around 2 hours and 15 minutes we've been trying to hold this level. But even on the 15-minute time frame, it's still not showing me any bullishness. When do I say bullish? When do I think it will? I would say, okay, it's a higher probable trade is if we break the 50 EMA. If you're able to break the 50 EMA, don't think the trade is going to run away from you. It happens sometimes. It never stops. It never touches the 50. It happens in some, like this dump. It didn't touch the 50 again. Look at that. It didn't touch the 50 until here now. So in a downtrend, the logic will say, the thing is, you have to find a niche or what works for you. You use EMAs, MACDs. You don't have to use what anyone else uses. You need to find what's working for you. But this strategy of the 50 EMA, price always goes back to the 50. I think I've said that before. If you look at this today, we had, was this today? This was yesterday, last night, where this big red candle, it came down, didn't touch the 50. So this is what I mean. Sometimes it runs away, but you're not going to miss out. Eventually it would come back. So when it came back here and you saw it stalling, not going anywhere, struggling to break above, is hitting this previous level that I had of resistance, and the EMAs over here, they were here, then they crossed over bearishly again. Once they cross over bearishly and they start expanding, or even when they just cross, if I can confirm it using my MACD, you see my MACD over here, the MACD crossed over bearishly and started expanding. The EMAs crossed slightly after it. MACD usually crosses before the 5 and 13. I think the MACD setting is lower or something. Maybe it's a 9 EMA. I'm not sure. Let me look at, yeah. The MACD is using a 9 EMA, so the 9 EMA will be faster than the red EMA I have here, the 13. So you get a cross, and then once I see the cross, that's a good time to go short. The EMA is also a level of support and resistance. So over here, if we look now, this is a bullish cross. The EMA crossed over, but this is a smaller time frames. Smaller time frames, you may get crossovers a lot. Even if you go to the 1 minute time frame, you'll see there are more crossovers. So you don't get a confirmed move unless you're trading really fast. 1 minute in, 1 minute out, in, out, in, out. You have a lot of capital, you're going in and out. Then you can use a 1 minute. But if you have a small capital, I find it harder to grow in scalp trading. But some people can scalp. I don't usually scalp. I usually swing trade. I leave my trade for a long period. I don't, during this bear market, I've tried several times to long. I've made very small profits, but I would say the losses and this downtrend from 69K on long trends were more than the short trades. So on a downtrend, I prefer to go short. It's easier. The trend is your friend. Follow the trend. The trend is down. You try to trade it down until you can't trade it anymore, until it reaches a level of support. Obviously, you don't want to trade short on a level of support. Over here now, at the moment, it's harder to go short. But if you feel risky, you want to take some risk, then you look for this. The drop, retrace into the 50, and continue to downside. Could this be the drop? And this is our retrace to the 50. We're failing to break the 50. And we're failing to break down below. We got support over here. We got one candle that didn't take us much anywhere. And the rest were all lower volume. Do you trade Bitcoin only, or Bitcoin, Ethereum, or do you trade Nasdaq? On the 15-minute chart, you can see now the candle is forming. We had an evening star over here. We're forming another evening star. This is on the 15 minutes, so things change quickly. We could be continuing. At the moment, the psychological levels are calculating. And when psychological levels are calculating, the spread is set for the next of the week. Then you have your psychological levels. And when you have the psychological calculation, you get, a lot of times you could get, because this range you see right here, between 22,297 and 22,226, it's a very small range for the rest of the week. It's not going to hold. I believe we're going to have some nice movement tonight, because this takes to calculate until, I think, till tomorrow night. It takes 24 hours, I believe, calculating. Oh, ETH is a good really good coin to trade. I made mad gains last time I was trading ETH when it was at 1,400 and it went down to the $900 range. That was a good trade. Good trade. You could make a lot of money, but it's you could lose money even quickly if you're using very high leverage. So as I said, when I started trading, I was going in big and I was losing. Once I reduced my trades literally to maybe $10 trades or even $20 max, and reduced my stop losses, started using stop losses or even trailing stops. I tried using trailing stops once or twice, but I think they're very good. But sometimes you miss out on the bigger move. You could get stopped out in profit, but you could have made higher gains with just leaving your stop loss. You change them manually while monitoring the charts. So the psychological levels are calculating. I believe within the next 24 hours, we're going to have some, we could have a range of $1,000. If we look at last week, what was our psychological spread? I'll tell you what was last week. How much of a spread did we have on our psychological levels, so you understand what I'm talking about. I'll look at another chart where I don't have Fibonacci levels, so it will be clear on this chart. And I'm going to switch off this indicator. Man, these lines that I have. The problem is I can't remove them because it took work and time to put them on. And I'm afraid if I lose them, then I have to do all the work again. A bit lazy if you ask me. Where are the psychological levels of last week? Why isn't this? Oh, okay, I have the wrong indicator on. I have the wrong one on. Let me put this other one on. So essentially it shows you the psychological spread of the previous weeks, and as far as you can go back. Last week our psychological level was this, between 21,463 to 21,080. So that's not a big range. It was just $400 and we broke out of it. We may be coming down back to this range. Again, retest it, but yeah, basically that's what happens in the beginning of the trading week, which is on Saturday. It's not the trading week, but yeah, for Bitcoin trades every day, so Saturday is like the beginning of the week. Yeah, it's better to use small leverage. If you have bigger capital and small leverage, you can make mad gains. For people who own like one ETH or one Bitcoin, they don't have to use leverage and it's easier for them to trade. They don't use leverage, so every $100 in Bitcoin, they actually make $100. They don't have to use leverage to make that $100. They don't have to 10x the $10 and be at more risk. So the more money you have, the less risk you're prone to. I don't have any paid education. I'll be happy to give you for free. So how I started. First of all, I started on Binance. I started with a $100 account. And in my $100 account, at the beginning, I blew it off, as I remember, because I didn't start trading futures straight away. I started buying spot, a bit of Bitcoin, $50 a month here, $20 whenever I would buy. And then I decided spot is not really making me much profits. I have so little of Bitcoin. I have Satoshis. You can't even call it a Bitcoin. And I started looking at futures. And in futures, I started trading with 125x full leverage. And at times I would make insane gains, but that was just pure luck, because I did not really understand a lot of things. I did not understand there is moving averages. I did not understand that there are Elliott wave counts, Ichimoku clouds, MACD. I wasn't using many tools. I was going in blindly. It's if you don't have any tools, it's like you're driving blindfolded. You're going on guessing. You're just gambling. But if you have tools, it's not exactly gambling. It's going on higher probability. So when I started trading, it wasn't using tools. It was just literally. And that is what every retail trader does. And that's why you get these high spikes and then a pull down, because retail traders think, oh yeah, it's going up. Now this candle you see right here, it looks like it's going up. It may go up. If I turn off my indicator, that's a nice green candle. And this is how I used to trade. I'll show you. Oh, I see this big green candle. I'm going long. Oh, I got stopped out. I just lost $5. Oh, another green candle. Wow, we're going up. And I'll hold it. And I get stopped out. I think I wasn't even using stop loss. So over here, this is a bullish candle. This is a hammer. A hammer is a candle. Look at that. That is a stopping volume candle. It's a hammer, and it's telling me we're going to go to the upside. But the opposite happens. It doesn't always work out your way, because you need to know what's around you. You need to know your surrounding. So going long at this is crazy. I'm going long at 2 resistance levels. I'll tell you. One is a daily open. That's where our candle opened yesterday. So that's previous support. Now it's our resistance over here. Previous support is resistance. When you break it, it becomes so I see this. Oh, I'm definitely going long. No way it's going down. And you see that and you go long, and you're going long into resistance. The daily open, the 50 EMA, everything is pointing downwards. I was trading in these kind of charts. I had no lines. I had nothing, not even trend lines. I wish I knew about these things before I started trading, but I wasn't watching anything. I wasn't following any YouTuber or trying to learn or reading anything. But once I started learning, look at that candle. That's a big candle. And it looks like it's going up. And if it goes up, people who went long will make money, but they're not going to pay themselves. They're waiting to do the home run. Don't wait for the home run. Have a target. Have a target for your stop. Before you enter the trade, you know I'm going to risk $20 max according to your liquidity. And the candles always come back to the bigger candles, liquidity. I'll show you something else. This is a red candle. A big red candle to the downside. That is showing me that, yeah, at some point they're going to come up, and they decided to come up now. And they might come exactly and hit it at 22,503. Very possible. The market works like that. The bots, the algorithms. So my advice, Jafar, if you're going to be trading, which you are, you need to have some tools. You need to have EMAs. They're very important because they tell you your direction. You could draw trend lines. Bull flags and bear flags don't always play out. You have a bull flag and then it fails. You have a bear flag, it fails. But it's a tool. So if you have more than one tool or more than one indicator that tells you that, okay, the movement's going to be to a certain direction, then it will work out for you. Then you take the trade. I'm not saying it will work out. You take the trade according to that. Now we have a green candle above the 50 EMA. So that is a good sign. It could be a good sign to move up. There are some indicators that are good if you want to do trading on bigger time frames. I like to use this other indicator on a bigger time frame. I'll show you. This is EMA Savvy, done by PA-Crypto, and this indicator shows you the EMA's crossover. And let's look at how accurate this EMA. When the market is ranging like this, it's not very accurate, but it gives you a good indication of what could happen. I'll show you. So over here, we have 4 EMAs. You have 5 EMAs, sorry. You have the 8 EMA here in yellow, bright yellow. You have the 13 EMA in yellow. You have the 21, and you have the 55 EMA. And this red one is a 200. When the 8 and 13 and 21 cross the 55 to the upside, then you wait. You see over here, it even has a signal. Over here, you see it says EMA cross in green. So that's a bullish cross to the upside. We had the 8 cross, 13. Once the 21 crossed on this candle, it shows you which candle crossed. So that's a bullish cross. You don't go on the trade there. You wait for the next candle, 4-hourly candle. So it takes a longer time. You wait for the next candle to open and close above the 8 EMA. Open and close above the 8 EMA. Then you open your trade on the next candle. The next candle wick down. Obviously, you'll have your stop loss slightly lower, maybe at this level of support over here. And you say, I'm willing to lose this amount. And you see you make profit. But once you see them squeezing each other and crossing into each other, that could be a good time to say, okay, I'm done. Or if you have a Fibonacci target or a trend line, okay, we wicked it, we did not continue, momentum is dying out. Let me look at my MACD on the 15-minute chart, or let me look at the EMAs on the 15-minute chart. If they're crossing on the 15, then maybe eventually they'll cross on the 30-minute, then the 45-minute, then the 1 hour to, it moves from time frame to time frame. They take longer. So at the moment on the 4-hourly chart, we had a bullish EMA cross. We had it on the 15th of July. So, okay, this is the cross. The next candle opened and closed above the 8 EMA. Yet, we came down. So your stop might be stopped out. But the EMAs did not cross over yet. I can go into another long because I did not take a big loss. And I keep my stop loss this time down. And I go long. It comes, doesn't touch my stop, continues. Now, if I'm trading on the 4-hour, I will wait if I want to go short, because now is not the time for me to go long, unless I look at smaller time frames. At the 4-hour, we're getting support on the 55 EMA, which is equivalent to the almost similar to the 50 EMA, but it's a bit slower. It's a 55. You see the support? We got 1, 2, 3, but we have a problem. 8 and 13 and 21 look like they're topped out. This is a classic double top. Look at that. It's very clear. We broke down. We got very close to my target of 21. Was it 21? I keep on forgetting the target. We got to a target, and if I'm to say, okay, I'm gonna trade this, I'll show you something else. I'm gonna go long over here. I decided to go long over here, say. I saw it going up and I said, oh, this is a good candle. I'm gonna long this candle and put my stop loss lower than the previous low. It continued up. Now it's going up. Where am I gonna take profit? I'm still not sure. Let me see where it tops out. I'll take the Fibonacci retracement from where I came in, the low. Not where I came in, from the low of the move. This move, I take it from here to the high, and I say, if it comes back, starts breaking down, I know that it could go up to the 0.618. We exceeded the 0.618, we got into the 0.786. So I won't wait all this time. You know what I'm saying? That I'm saying that if I am to go on the 1 hourly, this is another way of counting it. You want to project targets. To project targets, sorry, you were asking, I wanted to explain where to take profit. To project targets, I use the trend-based fib. So for example, I went on a long on this candle over here. And I say, okay, where am I going to stop my long? Where am I going to come out? I think if it goes to the 1-to-1 extension, so I take 1 from the bottom, and I saw over here a peak and a bottom. I did not get to the 1-to-1 extension, but I got to a very important level. That is the 0.618 Fibonacci. The 0.618 Fibonacci is a reversal zone. A lot of times Bitcoin will respect that. It will change direction when it hits the 0.618. You can take it at any time frame and you test it. So I go here. From this low, I'll take it to the high to know how far will we go. Actually, from this low to the high, I know that we'll go up to the 0.618, I said. Look at that. We came down to the 0.618 and got a bounce. 0.618 can be a bounce. Sometimes, as you see, we could go as low as 0.786. But at 0.618, I know that that is a good chance for a bounce. So if I took this retracement earlier on and I put it here, I know that if Bitcoin comes down to 22,526, I can go long. And how far long can I go? I will go long again to the 0.618. How do I find the 0.618 retracement of this move down? So you're measuring the retracement. How much will it retrace of this move? How much? I go from the top to the low. Again, 0.618 retraced. And you can keep doing it all along the chart and you'll see it repeating again and again and again. It keeps on happening. It's a pattern that keeps on repeating itself. Very useful tool, Fibonacci retracement and trend-based Fibonacci. These are very important because they let you know, they let you see the possibility of where can your next entry go. So now I'll say this. I know that from this top, I want to know how high will we go. Actually, not this top. Even if you take it from this top, how high will we go? I said we went to the 0.618. This is 0.618 and 0.65. I have both of them on. Now this one, from this top, and I go down to the bottom, and I say to myself, if Bitcoin will do what it usually does, we'll get to the 23K range. 23,074.75 exactly. We might touch the one higher. But I know if this green candle continues, I will see a rejection here, and it could be a good short for me for the short term. I'm not saying it's going to go down forever. So you need to have some money. You say, okay, if it gets to 0.618, I'm going to go short. Not financial advice. That's just what I might do. If it comes here, okay, 23K range. Okay, Fibonacci retracement. What else do I have in this level? Let's look at other charts. I have other charts. 23K, maybe. But at the moment, we're hitting my 4.618 Fibonacci channel. I had this target here, but with time, the target moves down. Let's see if it's going to react how it usually reacts to this channel, or are we going to break it and get support? If we break it and get support, then that's, see? If we break it and get support, then that would be an indication that we might move to the next level to hit this. But I also use other channels. I have this laid out. I have other targets over here. On this one, we broke above this blue Fibonacci channel. You see earlier we broke it and we came right under. Over here, if you go higher on the 1 hour chart, so with every hour the target moves 1 hour, it moves one candle down. If I say this, 23,251, it's very close to the Fibonacci retracement I mentioned over there. 0.618 was at 23 23,075, and 0.65 was at 23,132. So around that range, I know that we'll find good resistance. We have the Fibonacci retracement, 0.618 golden pocket, and we have this channel that I have here. So maybe within, if it takes another hour, it might go lower. As long as it takes, so 2382 would be in 6 hours. So that's how I do it. It's all probabilities. How much are you willing to pay to see your trade going your way? Like earlier, I went on a Bitcoin short. It got stopped out. I was ready to pay that price because I was feeling that my short will play out because I'm at a level I know that it's resistance. Now I'm above resistance. What am I going to do? How can you do this? I go to the 15-minute, switch on my EMAs on this indicator, and I look, where am I in the 50? I'm above the 50. I had a green candle. I'm above the 50. That is a good sign. I might come up, even test the daily open, which will also be resistance, and I have the 200 EMA on the 15-minute, which will be the 50 EMA on the 1 hour. This is my 50 EMA on the 1 hour. And the daily open, that is also another point of resistance. You have two things over there. Again, if I take it from this peak to the bottom, what do you know? 0.618 is right around that range. So you have three things that you can look at as resistance. Look at that candle. It's very strong. The faster the candle moves, in my opinion, it's more fake. It's fake. It's a false move. It will pull back. You might get a wick. The volume is not very high. It's not like what I like to see, like volume like this, or this is like a real momentum volume telling you we're moving up. Look at that. The candle over here was bigger and the volume was bigger. Over here, the candle could be starting a move up. If we go on the 30-minute time frame on the same chart, you could see something else. You could have an inverse head and shoulders. You have the where's that? You have this shoulder, left shoulder, head, right shoulder. There you go. What is the breakout? What is the target for this? Same thing like the M. You measure it from the bottom. You take it to the neckline. The neckline is not perfect. You take it from this to that. You take it here. And you say, okay, if we break out over here, I know this is a breakout. I know that I could get up to the 0.786, 22,759. Which will be very close to my other target on that other channel, which was at 22,600. On this other chart, I think I had a 22,600 somewhere here. Where was that? Oh man, I can't find that. I posted a video earlier. I said Bitcoin has to hold this trend line, this green trend line. We need to hold it. Why? Because if we don't hold it, then we're confirming the bear flag. We're coming back into it, and we broke, and these are previous areas of resistance. They were turned into support, and now we broke under. Even if we come up, we might be coming up to test one of these 2 points, either the top of the bear flag or the top of this white big channel that I have. This white channel. As you see, this and this was the middle of the channel. So we came down to the middle of the channel, got support, and we're going up. So which one will be the resistance? Will it be the bear flag top, or we're going to trend to this channel, and that will just tell me that Bitcoin is still traveling in this channel that I had. It had one touch here, up here, down here we had two touches. We moved up, the bear flag played. We came down, broke below the channel. This is the bottom of the bear flag. So we're trading between a bear flag and a channel. But here we had the channel, we wicked it, and we came down. I was expecting it to at least come to the bottom of the channel or the bear flag to confirm. Thanks, Jafar. I appreciate it. I appreciate you attending the streams. I'm more than happy doing these streams and explaining what I see in the charts. But my goal is to help as many traders as possible, especially beginners. The reason I started this channel is I thought to make it easier for beginners. I did not have good TA to follow when I just started. And a lot of beginners just tend to enter the market blindly and they get wrecked. Unfortunately, you get wrecked. You start adding to your margin. Your trade is in the negative. You start adding more. You take from your bank account, put it in so you don't lose a trade. Or even if you lose trade today, you're going to add $100 today and you're going to try and convert it. And then you end up doing several things. You end up doing impulse trading, revenge trading, FOMO. That's things. I listened to a nice YouTube video. I'll tell you what it was called. Let me look for it. I'm looking for it at the moment. Just bear with me a second. I believe it was called The Psychology of FOMO. If you listen to it, that's one book you should one interview you should listen to. This guy, The Psychology, Trading Psychology, How to Handle FOMO. It's on SMB Capital channel. Trading Psychology. It says Trading Psychology, How to Handle FOMO. Dr. Steenberger is the guy talking. It's very interesting. Another audiobook that I find interesting to listen to, I've listened to it more than once. It's a 3-hour audiobook. It's on YouTube. It's called Trading in the Zone. I forgot who wrote it, but it's an audiobook and I listened to it more than once. It helps you make sense and refrain from FOMOing. Refraining from FOMOing. I try to refrain from FOMO. What happens in the market is the impatient traders pay the patient traders. So people like, example, you'll be waiting for the trade. You're waiting for the level to, you're in no rush. The market will always be there. You wait for the level to be hit. You have the levels, you have the targets. Okay, you say, okay, if it comes here, 22,968, it's a strong level. Look at that. So you look at the chart, even if you don't look at my TA, I'll delete all of these. I'll delete everything. Remove all drawings. All drawings. There you go. Let's have a clean chart and just try to understand where and what could happen. It's very simple, but people like to complicate trading because it's unpredictable, but it's very simple. I see this, a couple of candles struggling. It's a small zone. This is on the 30-minute. Let's go on the hourly. We get bigger levels. There. This is on the 4-hour chart. I have 1, 2, 3, 4 hours struggling over here. I'll put a line over here. I know if I come here, or even when I start, look at that. You can't make this up, Jafar. Look at that. See this wick? We're struggling to go above. This is a previous level of support. This region, you can draw a box or a rectangle around here using the tool. This will be your region of resistance. You know that if you come here, you have an 80-70% probability that you're going to reverse a bit. Unless you break it. If you break it, then you know, okay, the probabilities are changing. I'm reversing to the upside. So look at this pattern over here. It's kind of similar to here. We came down, got this kind of candle. Not quite the same, but we reversed up. So you see this candle? It came down to this support. Look at that. These are 4-hourly candles. Count how many? 1, 2, 3, 4, 5, 6, 7. 7 times 4. That's 28 hours. And If you add one more candle, 32, it blasted off. So you know this is a strong support if we come down here. And you know that if we break it, it's going to be strong resistance. You're welcome, Jafar. You're welcome anytime. So that's how I do my trading. Hope you like the stream. And share the stream, share the videos. And trade safe. Like and subscribe, comment. All the good stuff. Help the channel. I do TA very frequently. More trades. I'm out, man.